It's always hard to come in and speak after something that's so compelling. So before I get on to the main meat of what I've prepared, this has been an interesting session, a very interesting evening. And I just want to make a little connect with what I've heard so far so that I don't end up saying something without reviewing what I've learned today from both the panels. When Avi called me, and so did Rasleen, and asked me to participate in this and told me about the two topics, I wasn't quite sure what I wanted to do. Intrinsically, I should have gone for the corporate story, but I decided that I'd do something that I perhaps know little about, and after Ingrid's very compelling speech, I'm pretty sure I know very little. But since the topic today was all about growth, and I think a lot of people believe, though some companies still believe, it's firms and institutions that drive growth. I think it's really the real agent of growth in the world is the individual. And hence I chose this particular panel because inclusive growth is not, unfortunately, about the government, which at best can play a facilitating role. It's always scary when the government tries to get into doing things themselves. Or the corporate sector, which believes they drive growth, and we're all beneficiaries of that, but very often they catalyze growth. The eventual agent of change is the individual. And in some ways, if I may borrow from what Shankar said, Larry Fortensky with Liz Taylor on that fateful day, I forget the year, but I'm sure that fateful encounter did not depend on the institution of marriage, which caused them to meet. But I'm sure the outcome, and I don't know how it was, but the outcome must have been driven by the resources and capacity of the two individuals involved. So I guess it's important. It's very important to link back to what the distinguished speakers before me said, and certainly this very compelling story. I just decided I should lighten up the screen a bit and link back with another thing that Shankar said. The future will be controlled by nations that have the 3 C's: cash, commodity, and creativity. And clearly India was lagging in 2, and as everyone else has talked about, we seem to do well when it comes to creativity. But that's how successful countries perform. But if you talk about individuals, which is where my focus is going to be today, successful individuals, unfortunately I don't have the same letter for all the things I'm going to describe. A good, successful individual is one who has the focus, energy, passion, integrity, execution, excellence to do what he does or she does, and finally, creativity. So there is a common element of creativity there. I'm sure Larry Fortensky had to do the same. All 6 elements were important. But creativity ends up being the important link between what the macro system can provide in the cash, commodity, and creativity cycle, as well as the individual cycle. And that's where the best known quality of the Indian brand, and I think the best brand, we were struggling with some names, I think the best brand is the Indian himself. And sometimes we undermine what the global Indian has done, what the resident domestic Indian has achieved, what the diaspora people like ourselves in this room have achieved. And I think that's the best part of the brand. And creativity is the link between what the companies, what the governments can do, and what the individual can do. And inclusive growth is going to be the important link between what the macro drivers of growth and the micro drivers of growth come in. And within that is the boring topic that is often talked about. Microfinance becomes a very, very important part because finance plays a critical part in almost anything that this world needs. It's almost scary after the recent crisis to tell the world you're a banker, but nonetheless, finance will still play a part. And microfinance, I've put together a definition. Many of you know what it is. One thing for sure, it isn't. Microfinance is not charity. Microfinance is about allowing people to access quality financial services so that they can make choices that can enable them to raise their incomes, can enable them to have access to products, goods, buy assets, and also create some level of absorption against shock in the future. It's a medium to lift people out of poverty. And it's not just about lending. It's not about the proverbial money lender who lends money to you. It's about giving them services that are broken up into small pieces and can be accessed by them so that they can raise their levels of life. And it's important that it is done as per their agenda. It isn't done as per the agenda of the provider of the services. And definitely, the poor and the underprivileged should be beneficiaries. It's very important for the reasons I mentioned earlier. We all have to focus. If we believe in inclusive growth, we do have to ensure that the resource and capacity of individuals go up. And hence, finance becomes very critical. What microfinance is not, it certainly isn't charity. And I know I'm speaking about a topic, for those of us who still read a lot of Indian media, microfinance is now currently becoming a four-letter word, given what's happening with the industry, what's happening in the state of Andhra Pradesh, and with a couple of companies that have been in the thick of action, especially SKS Microfinance. But it's important to understand and take a balanced view of what's happening. While on one end, it certainly adds to the resources and capacity of individuals, on the other end, it does require people, firms, on the demand side to create opportunities which can harness this opportunity and make it commercially viable. So it clearly isn't charity. If you do need something to sustain itself, it must pay for itself. But on the other side, it is not meant to be predatory. The intent is not valuation. The intent is value creation. The intent is to give or create value. If everything is going to be based on a concept of creating valuation, then we run a huge risk. And remember, I said there were 6 important ingredients to make an individual successful. One of them was integrity. You must be able to pay back for capital, but you don't have to make this one of those high-return capitalist opportunities where you end up finding that you're highly levered, where you end up finding that you can't sustain it, or you're using predatory practices to do things that end up destroying the very same thing that you're trying to create. It's all about empowering people, enabling success, and enriching lives. If we want India or the world, and I think with 1 out of 6 people in the world being Indian, we need to take this context of inclusive growth slightly out of India. In some ways, as Indians, we are all beneficiaries of some philanthropic or inclusive growth programs that may have happened in the past, for whatever reasons. Whatever agenda of globalization may have happened, we all benefited from education. We were picked up by multinationals. We were allowed to move out. We were allowed to benefit from some of the stuff that we are today recipients of. But today the world, in the last 3 years, has seen perhaps one of the worst crises. And the reason is, instead of empowering people, enabling success, and enriching lives, people have ended up looking at things very differently. And I'll dwell on that a little bit more later. It's important, and I'm borrowing a line or a phrase from Jacqueline Novogratz. I had the good fortune of meeting her last year when she was in Dubai. I spent an evening meeting her. She was very inspiring. And it was a term that, until that day, almost sounded like an oxymoron to me. How could capitalism ever be patient? And that's the day where I learned that it was possible. If we believe we need to have sustainable growth, if we need to believe that we don't run out of juice, not just within our lifespans, but really beyond us, and if we believe we're going to leave behind a legacy that is going to be talked about, and our children and their children are going to be beneficiaries, then it's very clearly important that we allow people to grow at their own terms. It's very important that people are able to access and make choices. It's not about a company's agenda. It's not about a bank's agenda. It's not about a financial institution needing to fulfill its targets. It's about making sure that the recipient can receive it. It's very important, again, while we are talking about microfinance, it's important to integrate, and there's this complicated chart that we just try to put together, something that we learned in the IIMs. But it's essential that the corporates, donors, governments, players, all get together and understand that they have specific roles to play in this part. And if each plays the part it's best at doing, then success is inevitable. But the return should be measured not, and this was Jacqueline's gift to me, is not to be measured in terms of the ROE or the ROA that you make on the asset, but certainly in ensuring that the capital gets paid back 95% to 100, 105%, because sustainability is important, but more importantly in the social value you create. And how do you bridge the difference? You bridge the difference because big corporates, manufacturers, medical device manufacturers, FMCG companies, if they want to eventually grow and sustain their own industries, they have to develop not just the top 300 million high growth, high pace, whatever you call it, the middle class, which is today as good as any other segment in the West. But we also have to worry about sustainability that will be required for the 800 million other people who earn less than 45 or 50 cents a day. And that's where the development aspect, and I think we heard that story a bit, is very important. That's where the Indian creativity is going to be important. That's where the role of the government is going to be important. For the size and scale of countries like India and China, there is just no way traditional methods can work. And that's where the role of microfinance and how it gets channelized in the last mile, how it gets administered, and how it catalyzes and dovetails with other participants in the real economy is going to be very critical. And the basic ingredients of microfinance institutions is really three players playing together. Governments should only play a part where markets are not capable of playing a part on their own. And very often governments have this irresistible, Sanjay, due apologies, but have this irresistible urge to jump in and run businesses, which they're never geared to handle. But they certainly have a role to play. They have a social mission. And again, we're talking about countries like India, which are very populous, not enough in cash, not enough in commodities. We just have a large population, and that's the strength we have to harness. So it's extremely important that there is a partnership of capital, innovation, and of course social entrepreneurship. Even the US, Obama is now launching social innovation funds where the government is putting money aside, but it's giving it into the hands of entrepreneurs who know what to do with it. And that's the important piece. And that's what that quote, which is there from Muhammad Yunus up there on the slide, I can't read it from here, I'm sorry, I'm challenged. But it does say that all people are entrepreneurs, but many don't ever have the chance to find out. So if there are 69 billionaires in India today and $100,000 millionaires in the country, and there are all kinds of global names and global brands that we talk about, from just 300 million, middle class, that is the market everyone wants to harness, can we imagine how many more might lie in the 800 million that we haven't even tapped? And I think that's where Ingrid's story gets more compelling. The other part that we must remember is that very often reform and outcome takes a long time. So if we believe that much of this is going to become a constraint in the long run, while India is clearly the rising global power, and I don't think in the next 10, 15 years we're going to see it slow down, irrespective of what we do. I think if we want to grow for the next 50, 70, 100 years, we must make sure that something is done about the 800 million people that we're talking about today on inclusive growth. And that's where it's important to handle society's most compelling problems. And in many ways, it's the agenda of inclusive growth. I'm talking about just one. It's about poverty, it's about health, it's about education, it's about environment. These four elements are going to increasingly drive the agenda for the years ahead. Sanjay did mention that we wished we were 15 and 16 today so that we could be part of this high-growth country. In many ways, I guess in some ways we're referring to the excitement of being young again and starting all over again. But in some ways, it is also the excitement of being able to see what lies ahead for a country if we just do everything right. The important thing about reform and change or everything else that we do today is that the outcome often comes years and decades later. So if the IIMs were set up by whoever it was, whether it was Nehru or whether it was someone else back then, it is important to understand that the effect was only received now. Can we afford to wait? We cannot. So technology, and Kiva is an example of technology, how microfinance has used technology, Freedom from Hunger, Water.org. These are just examples of how finance dovetails with social organizations to be able to increase skills and eventually create subsidiaries or create institutions that will create some kind of labor demand. It is that labor demand which will take care of opportunities that the supply of labor that we have enough of will end up satisfying. Emerging markets rarely have problems of unemployment. They have a problem of underemployment. India, and I think we learned it in our schools, has a problem of disguised unemployment. If we could get our individuals, our people, gainfully employed, more productive, and if you just looked at the line outside the restroom, that again is an indicator of the kind of sheer absence of inclusive growth. The line outside the gents' restroom was much longer than the one outside the ladies' restroom. And the reason for sharing this example is it very clearly indicates the kind of split we had in the IIMs. Inclusive growth is also all about gender participation in the economy. With 500 million or 600 million women in the country, if we don't involve that part of the economy in the growth, we're clearly not going to be very productive. And that's where microfinance has actually recognized the importance of women in sustaining and playing the important role that bridges economic growth and also the role of being a mother or being a wife, of looking after the home. It's a very powerful element. I won't bore you with this chart. I think numbers and statistics have been bandied about. One thing for sure, whichever way you build it, it's a very large number. It's daunting, it's scary, and it shows that we certainly have a part to play in the world. Why is it such a compelling proposition in India? Because the fortune, and to borrow from C.K. Prahlad's lines, the fortune lies at the base of the pyramid. Corporates focus at the top of the pyramid. Corporates have investors, shareholders who want returns. But if you have to look at what it takes to build a country, you really have to worry at the base of the pyramid, especially when you have the demographics of population of a country like the kind we do. And clearly, there is an access to a lot of funding, a lot of government programs, and even failure of the government. The National Bank of Reconstruction and Development, which started the self-help group process in India years ago, took a lead, but it did not work. Money lenders ended up being more successful than what the government was trying to do. So the social mission of the government failed because money lenders were just better, they were more competent, they were faster, they gave doorstep service, and that's where the Grameen model of joint liability groups came in, where the focus was on the individual and was not on the group. And that's where the role of the social entrepreneurs comes in. There's been a lot of growth, but not enough of microfinance. There's been valuations of $2 billion for SKS Microfinance, and of course, as soon as the IPO happened, everything else crumbled. But we've just about scratched the surface. There are at least another 150 million people or households that could benefit from microfinance. But much of what is happening in microfinance is lying in just about 4 or 5 states, which are just known to be better when it comes to handling payment of credit. And there again, when a few people incubate a business, the other firms rush in to be able to sell more to the existing player. So while liquidity creates markets, excess liquidity creates bubbles. And that's the classic case of what we are seeing now. There is a need for far greater participation. There is a need to broad-base this. Inclusive growth is about crossing sectors, crossing geographies, crossing genders, crossing all levels of society, so that the entire labor force that exists can effectively be covered over a period of time. And there are strong enablers today, and I think something which we don't realize. There's a regulatory framework that has been established. There's today a microfinance institution network. There's a microfinance credit bureau. There's a microfinance bill that exists. People to lend. On the other side, there's a lot of infrastructure development that the government and the private sector through participation have worked on. Did you know, of course most people know about what Nandan Nilekani is doing on the unique identification number, but also in the public information infrastructure today, Sam Petroda is heading this group which is linking up all the village councils and the panchayats, so there is an effective communication method. So infrastructure is building up, and then finally, of course, there's a whole space. ISRO is mapping out every village, every hut, every park, so that there is a way of positioning, reaching out to people in a more effective fashion. All this clearly leads us to what has happened in the West and what has happened in the recent 3 years. I think it's important to understand inclusive growth for what we have seen over the last 3 years. Traditionally, US, Europe, the Western developed economies were driving growth. The last 3 years we've seen that they ran out of steam. Was their growth inclusive? It wasn't. Today, the Americans would love to see the Chinese consume. But what the Americans cannot consume today cannot be picked up by the Chinese, because while they're great producers and manufacturers, they're not good at consumption and not enough is being done. If they had done timely inclusive growth, perhaps this crisis could have been better handled. And I think that's something that we need to pick up. We've talked about consumption and production moving eastward, but capital has remained in the West. The center of gravity clearly is shifting. And it's something that we must realize. But take a leaf from this book and realize that even within the country, within India, we had better proactively work and do something, because 300 million people with 800 at the bottom of the pyramid need to be addressed. Otherwise you have the Naxalite problem, crime, and other issues which will come up. It's all about focusing on the customer. It's about focusing on the individual. Sustainability and predictability are critical. But more importantly, I think we need to go back to basics. And this is what this crisis has taught us. It's very critical for the world that India and China does well. It's very critical for India that the people at the base of the pyramid do well. Otherwise, we might end up falling prey to exactly what has happened in the world. And hence, it's all about basic values. It's about remembering and learning from what has happened in the world. It is not about skinning the cat. It is about investing in muscle. It is about remembering how to do ethical business. It is about value creation. It's not about valuation. All of us have been trained to always worry about ROE and take things to an IPO. But when you're dealing with your own country, when you're dealing with issues of the nature that you are, when you're talking about sustainability and predictability, it's extremely important that you do not forget the basics. Net, anything to do with inclusive growth is highly prone to abuse. So we should be very careful. And we have seen, and India has seen, every time something new and creative has been brought about, we have seen a few spoilers. Somebody talked about spoilers early. And I think Morgan Stanley did it in India in 1993 when they sold their first mutual fund in the country, but they sold it as an IPO, and people were trading a new fund offering at a premium which was 350% for a mutual fund. People did not know. And for 6 years, the mutual fund industry never got developed. If you see what Mr. Kalmadi has done to the Commonwealth Games, he's taken away from a country that's shining, but in some ways has set us back in the eyes of the world. And of course, in a responsible media that made sure that everybody in the world heard about it. SKS Microfinance, in some ways, is probably created a complete danger for an industry that is so critical. It is too big to fail. The micro players can fail, but it is too big for India to have microfinance fail. It is too big for India's future and the world's future for microfinance to fail, because that is going to end up stimulating and creating the kind of growth we need. It is very important that we look at gradually reaping the gains. And by the way, not just for microfinance. Anything to do with micro benefits, anything to do with the lower end of the pyramid, it's better to be patient. This is an opportunity that has a lot of juice in it, a lot of sustainability in it. We need to milk it gradually. And milk is a bad word. We need to nurture it. We need to get the right gains for it, because that is what is going to keep us going for the next several hundred years. But if we choose not to do it, then pretty much like what we're seeing in the microfinance industry, which is just about 5 years old. 2005 is when it got a lot of eminence. 2010 is when the first IPO happened and it made news. And that happened in Mexico too with Compartamos. It might implode. And without finance, without participants coming into the picture, I think India's growth is in danger. So with that, all I can say is, all of us, whichever sector we represent, as individuals, we have a role to play. As companies, we have a role to play. As governments, we have a role to play. The Andhra Pradesh government passed an ordinance. Protectionism is not the name of the game. They have to find ways to facilitate it. The idea is not to bureaucratize the process. On the other side, companies have to be more reasonable and understand that returns have to be seen in social value and have to be taken in the longer run. And finally, individuals. You cannot forget that each of us were recipients of some gain. Each of us were recipients of somebody who included us in their growth. It's time we left it behind as a legacy.